Hey guys, welcome back to the channel. This is Future Trading with Mike, and today is August the 5th. We're looking, what I have up on my screen is the ES futures. That's the E-mini S&P 500, the derivative of the major index, the S&P 500. But like I said, today's August the 5th. It was non-farm payrolls today. I didn't do any trading today, you guys. I stepped back from my computers, my monitors today, my charts, so I didn't do any trading today. And I'm looking at the market now. It's currently my time, Eastern time, about 2:30. So I may take 1 or 2 trades this afternoon. I'm not sure, but I didn't do anything this morning because I had some appointments and things that I had to take care of this morning. And but what I wanted to talk about today, a topic that I just wanted to kind of address. I know I've been talking about this, and if you guys know my style of trading, you know I'm a price action trader. You know I follow every market structure. Market structure to me is the most important thing. The first and most important thing you need to really understand, in order to be able to understand how to read the market correctly, is what I'm trying to say. Because the market, I've said this so many times in the past, it will paint a picture for you during a session or even going back looking at prior sessions so that you can actually kind of get an idea before you start trading into your to the new session. Which direction to kind of trade, kind of formal bias, whatever the case is. But yes, market structure, always pound, market structure, price action, market structure, price action, market structure, price action. You got to understand those things, guys, if you really want to become successful in this trading, business, whatever the case is. So if you're interested in any good, solid reading content, because I can tell you guys this time and time again, what is reading? Reading is fundamental, okay? It allows you to gather content, information, research. I'm not saying all content or information is worth reading, but I've got some great books down in the description portion of this video that I have pretty much put links in the video or in the description portion of this video that you can check out. Some of them surround volume analysis, market structure, price action, supply and demand, which is the way I trade. And if you don't know anything about supply and demand, I highly, highly, highly recommend that you understand and learn supply and demand, because it is the inside scoop to me of the best way based upon my opinion, based upon how I see it, is being able to trade and trade with the bigger players in the market, the institutions, the market makers. We want to trade like them. We want to be in the same moves as they're in. We don't want to be trading against them, because you will lose if you're trading against them, okay? So supply and demand for me is where it's at. It doesn't take a lot to actually trade supply and demand. You don't have to have a bunch of indicators in your chart. You don't have to have, just looking at all these various things, whatever the case is, because for me in the past, I had those type things on my chart, tons of indicators, which the indicators did more confusing to me than anything. So when I cleared my charts, started from a naked chart, traded a naked chart consistently for a period of time, which I would recommend you guys do if you're at a point in your trading to where you learning this strategy and trying to pick up things from this strategy. Trust me, you've got to declutter and wash your mind completely and clear of everything you may have learned. If you really are struggling and whatever you're doing strategy-wise not working out, and you want to learn a new strategy, you gotta wash your brain clean. You gotta declutter things. You gotta start from scratch. Okay, so supply and demand is where I started to become successful. Okay, and I stuck with it, and I didn't try to change anything. I try to in time. We always back tested, and because the market's always evolving, whatever the case is. But that's pretty much it, guys. So also, if you're interested in joining the Discord, I highly recommend you take a look down in the description portion of the video. Find the link to the Discord. It's free to join the community. We have a ton. We have some good, solid, fellow like-minded traders that we share our ideas and our thoughts about the markets while we're in the markets, trading each and every day, throwing out levels. People ask questions. There's always someone that's going to give you an answer. So it is a friendly community to where we as future traders come together and talk about various things pertaining to the future markets. Okay. So without further ado, let's go ahead and jump into today's video and talking about, pretty much supply and demand, and how do you identify, locate those zone locations? How do I do it? Maybe they help you out in your own trading or whatever the case is. And it's not hard. It's simple. Okay. So I'm going to show you a couple examples here and talk to you why a little bit about why these are supply and demand zones, and I may not highlight both a supply and demand zone, whatever the case is. Well, maybe I will. We'll take a look at, I believe, yesterday's trading session, because I didn't do any trading today, and the market's still kind of moving, whatever the case is. But just kind of hindsight, going back, look at some areas where that I have marked off on my charts, that, especially my 12 range chart, what you see here, that could have been solid areas. But we'll look at those now. I'll pick a few, and we'll take a look at those. And if you don't know much about supply and demand, like I said, I highly recommend you do so. I'll just leave you with this quick tip. Supply is an area where there's aggressive selling coming out of the market, okay? And demand is the opposite, the flip side of it, where there was aggressive buying in the market, okay? So that's the reason. Just kind of think about that, you know? Aggressive selling, aggressive buying, you know, and you want to be in the move where the aggressive selling and the aggressive buying started at, right? Okay, so that's the reason why, you know, in a nutshell, why you should want to trade or take a look at supply and demand, because we want to get in the move where it started at, right? We want to get in the move where buyers were aggressive and they're buying and price comes back to it, and there's still opportunity because more buyers are probably going to put in positions to join the ride, maybe back up to the upside, or the flip side, if you're looking to sell, coming back down, whatever the case is. All right, so we'll take a look here at the first example. All right, hey, and by the way, to everyone, I forgot to say this at the beginning of the video, everyone who has subbed to the channel, if you're a current subscriber to the channel, or if you're not even a current subscriber and you're actually watching this video as a newcomer, appreciate you tuning into the video today, watching the video content. I always thank my subs. You know, I really appreciate you guys, because without you, this channel wouldn't, you know, be where it's at today. I thank everyone who's joined the Discord. You joined the Discord and you hit that sub button on the YouTube channel for a reason. Thank you guys. But please do one thing. If you have not clicked on the little bell icon next to the subscribe button, please make sure that you do so, because some people have sent comments and asked, you know, a subscriber on the channel, but I'm not seeing or getting posts, getting notified of new content or new videos when you post to the channel. That's going to do it. So please make sure you turn on or click on that little bell icon to turn your post notifications on, so that each time a video is uploaded here to the channel, that you never miss one of the videos, okay? All right, let's jump into it. Okay, so I'm going to show you an area first off, which was an area of resistance that price pulls back to. It's not really classified as a solid area of demand, but as price was making, okay, you see here it made a low right here, pushed up, made a high here, pulled back, made a higher low, and then it breaks to the upside, making making these highs here. So this was a big swing to the upside, and within that swing we had what? We had supporting swings, making these little higher highs, higher lows. Okay, all right. And when price, all we're looking for really is if price pulls back as it's on its way to the downside, I mean where it pivots and starts to make lower lows and lower highs, chopping to the downside, price can bounce at any given area of right at support, or it can tap into an area of demand, which is how I trade. And the demand area is going to be found tucked back into, okay, the lower end of a swing when price is making higher highs and higher lows. So like right here, price made a high here, low, higher low, and then made a higher high as we push to the upside. So this is a swing, a supporting swing within this bigger swing to the upside, and the demand area is going to be tucked back down in this area here. So if I was to draw this area or demand zone, I would be drawing it, let's see here, this area right here. This is what I would classify as the area of demand, okay, out of this move to the upside, okay. Now, but price can bounce on its way down at any given area. There are some areas, smaller areas of demand, okay, but what I want to focus on here, okay, for one, there was an area of price pullback to an area of support right here, okay? This is an area of support. And some people ask, okay, well, what happens? Do you trade areas of support or resistance when price hits right in the area of support or resistance? Yes, but it depends on, and I'll show you an example right now. It depends on, I've got to see if price is at an area of support, say for instance, okay? And it bounces there. I don't think the trade is like that. I gotta wait to see if there's going to be full-on rejection, okay, from the lower time frame, okay, not right off my 12 range chart. Even though price gets back to a level, a zone, whatever the case is. In this case, it's a zone, it's a resistance zone, but we're looking for supply and demand zones, and we're going to cover that. In this case here, this is actually an area of support, all right. Price taps to the area of support in this box right here, okay? We see it right here at 10:40 on August 4th, which was yesterday. We'll switch over to the lower time frame chart, okay? I'm using the 12 range as my higher time frame at this moment, And then for me to get see the full on rejection, I have to look at the 4 range now. Okay, so we're right here. This is the area right here as we were just looking at in the 12 range chart. We're on a 4 range chart. These are my charts, not my charts, but the charts that I actually use. Okay, now you may use volume charts, tick charts, minute-based charts, time-based charts, whatever the case is. So we're here. Okay, what's the thing I'm looking for now? I'm looking to see. Okay, first of all, I want to see on my 12 range chart. Excuse me. Right here. This is it right here. Okay. Okay. If price rejects this area, what areas of resistance could price possibly, stop it or halt at, if it rejects this area on its move back to the upside. Okay. So we're looking for, at this point here, look at the higher time frame, using our 12 range, say for instance, this would be more so what they call a counter trend trade, or taking a long. Okay. But if we get the rejection, there's nothing wrong with taking that. Okay. Price does reject here. I see this area of resistance sitting above. Okay. So the moment price really breaks above 41 and a quarter, 41 and a half, I'm kind of interested in going long. All right. So we're on the 4 range. Okay. There's a swing to the downside here. I want to see breaking structure and then price making structure. Making structure just means that price is making higher highs and higher lows, and breaking structure means that it's taking out structure as it's moving to the upside, meaning breaking through areas of resistance. All right. Pushes up, pulls back, breaks higher to close this candle right here. All right. Breaks higher right here. Now at this point here, I'm probably going long in that, at this instance here, because I know I have some room to the next level to the upside. Okay. And looking at my 12 range, which is my higher time frame, to at least possibly take it up to around the 44, 45 area. Okay. So if I get into my trade right here, say to close this candle here at 42, 42 and a half, it's not, I'm probably going to take my trade right there, okay? And there are probably going to be instances where I can, on a second test to get into the, a second trade, whatever the case is. All right, so price closes above, see it in the 12 range, okay? All right, I'm in at that moment there, pretty much, okay? I'm in at that moment, all right? Now, in the past, I've always said to look for a retest, okay? But in looking at the 12 bar, we still have some room, some area to fill, and looking at that swing above us, which is that area of resistance we just saw on the 12 bar, which is right here. This swing to this swing here to the downside, pretty much. Price made a low here, pull back, swung lower, right here, pulls back, swings lower. Okay, this is a supporting swing out of the swing to the downside. Price breaks 41 and a quarter. I'm long. I know price is probably going to have its first area where it can actually maybe pause at. It's going to be right here around 44, 45, 44 or 45. But really more so, I know that price is probably going to have definitely a chance to maybe even push up to 47 or 48. But the thing about it is that when price pushed down here, right here, it pushed down, it pulled back, it broke lower, it kind of pulled back and tested this area here. So my first level, my first level of interest to take my trade out or release my first contract is going to probably be right here at 45, 46, somewhere around there between 44 and 46. You kind of got to let it play the trade play out as it's happening once you're into the trade. Okay, you start seeing some areas of resistance or prices bouncing from a certain area, which will be right here. Then you simply just get out the trade. Okay, if it kind of spooks you, whatever the case is. All right, price kind of clears this area here. Okay, and I take my first contract out. If I'm trading, say, for instance, 2 contracts, then I'm gonna let it ride up to probably this high right here. Okay, but all right, so that's an example right there of me trading off an area of support. Now you're saying, well, you didn't talk about trading off an area of supply in a minute. I'm going to get into it now. I just wanted to show you an example of looking at using the higher time frame, price pushing, moving back to an area of support, and then trading off an area, trading rejection when we look at the lower time frame. Okay. Now here's an example of an actual area of demand. Okay. Right here, same area. When price pushed down here, it pulled back, broke lower, okay, forming a swing to the downside, right? All right, then what does it do? It turns around and starts making structure back to the upside, and it takes out this high right here at 41 and a quarter. We just covered that. Pushes up, pulls back, boom, breaks higher, and made a swing, making a high, higher low, and a high. What's the zone we're looking at to pretty much marking? All right, let me move this box here out the way for right now. We'll pull it over here. I'm going to mark the demand zone because the question is where do you mark your zones? You know, pretty much where is the zone location? Show me where it's at, right? All right. So to me, I'm looking for this area right here, okay, and see if price is going to tap back into it once it takes out 41 1/4, okay? Pushes up, pulls back, breaks higher, okay? Now, could you trade this area right here? Definitely could, okay? Because this is when price broke this area right here, 41 1/4, forming a swing to the upside, you see right here, price comes to that area right there, okay? All right, it comes to that area. So we'll switch over to the 4-range chart and see what happens then, because we are in an area where price can reject. It isn't small. It is an area of demand. It was aggressive buying came on this area, okay? But a price could also come back and test this area right here, the lower end where this low is at, okay? So we'll look here at 11.17 and then again here 11.40, all right? Let's take a look. See what happens. 11.17. 11.17 is in this area right here, okay? Now, do we see anything on the 12R? Take a look where price could actually, if we got into a trade right here, where could we possibly take the trade back up to? Well, this is the previous high right here. This is the high right here as price was coming back to this area right here, okay? All right? So, we see here on the 12R, green candle closes to the upside. Do I take the trade right off of that? No, because I'm using my 12 range as the higher time frame in this case here. If I'm trading from using it as a higher time frame, I want to scale down to another time frame as my lower time frame, right? All right. So in this case here, I look above. I say, well, price, if it rejects this area here, okay, it's got a potential to come back up here because when price was chopping to come back to the downside, hitting or testing this area here, there's still an area right here to feel where price has to test it at. So it could potentially come back and move back up to 49.50, 50, or the 50 area, right? All right, but I want to see and get confirmation off my 4 range for rejection. Okay, so here we are right here, okay? Same area that we just saw on the 12R, all right? So what I want to see is price showing some form of rejection for me to go long, okay? I see it right here. It pushes down, pulls back, pushes down, pulls back, that little W formation right here. The moment this green candle here closes to the upside, say at 43 3/4, right at 44, I am long. And I'm going to take my long, possibly right back up to, first of all, this area, maybe the first contract out at 46 1/4. And then if I'm in on another contract, or even stay in, you know, if you see price still moving hard to the upside, possibly getting up to the right here at 49, okay, 49 1/2. That's going to be my 40. That's going to be the area where I'm going to take my first contract out, or if I'm only trading one contract, I'm going to get out of the market, okay. All right, because it's a solid area. Why? Because there are areas to fill, as you can see here on the 12 range, which we're using that as our higher time frame at this point in market or demand zone. All right, that's that area right here, okay. All right. There's area to fill. Price came down, pull back, push lower. This is the zone right here. Price rejects it. Boom. There's nothing here that's really going to stop me until it gets about right here at 49 1/2. Okay? Take your trade back to there. Seriously. Take your trade back to there. All right? Then it comes back to that area. It actually pushes a little higher. Goes up to 53. Chops back down to the downside. Taking this low out here. Okay? So taking support out. Pushes lower. And taps into this little area right here. Now, let's look at that area there. That's at 11.40 yesterday, okay? Let's see what happens. All right, I marked it there. Let's see, 11.40 right here, okay? Now, it's back in that zone. This would have been the zone right here if I was to draw on the 4-range chart. But the zone we're looking for is the demand. We just marked it off our 12-range chart. Once again, it is right, where we at? Right here, okay? Right here. This is the zone, 10.40. An hour later, it comes back to that zone. We're looking for some area of rejection, right? Okay. Now, the only issue at hand here is going to be, you ask yourself, what? Okay. Well, we do have some area of resistance right here. Okay. But price really didn't take out any structure coming to the downside so far off the 12 range. Okay. So to me, it's like, all right, well, if price bounces when it's down here and it didn't take out any structure right here, take this low out here or come down, take this area here out, and it's rejecting this area right here, it's still potential for it at least to what? Come back up and test got a swing to the downside. Within this swing to the downside here, you have a swing down, pull back, supporting swing coming out of the bigger swing, okay? It could potentially even push up to test this area here and the top end of this swing right here, okay? All right, and even the high back up here, okay? But we get back to this area where we're already back at the highs pretty much. So if I'm trading two contracts, say for instance, all right, price rejects this area, I'm going to go long, taking my trade, or makes my first contract off back at this area here, somewhere around 46, depending on what price action is doing as it's pushing higher. If I get any kind of resistance, I'm going to get out, okay? If it's showing me it's still bullish and want to continue to push hard to the upside, I stay in it until at least we get back up to the 50 area again. If we go over to take a look at our 4-range chart, and we're going to look at another example as well, all right? 4-range chart, where were we at? Sorry about this, guys. Oh, that's 24 range, not 4-range. Sorry. Okay, so we're in this area right here. All right, price pushes up. This is that swing we just saw on the 12-range chart. Okay, same swing. Okay, swing down, pulls back, pushes lower. Right, and within this swing here, we've got what? A supporting swing coming out of that. So, to me, in looking at things, if we look at the 12R, even you know, to say so. The price come back and even when it got right here, has it tested this area within the supporting swing yet? No, not yet. Okay, all right. So like I just said, my first area is probably going to be, if I get into a trade, it's going to take it back into this area here. First contract, second contract right here. All right. So looking at the 4R, price shows some rejection here. Pushes down, pulls back, pushes down, not pushing any lower. Boom, right here at the close, and the price takes out this area right here. It formed a W structure, okay? 44.25, I'm going long, okay? I'm going long, all right, here to at least 47.5, okay? At least 47.5 on the first contract, and then take it back, my second contract back up to the 50 area, okay? It's simple, guys. You just got to be able to see it and read it. So you got to look at your, say for instance, your 12-range chart. I'm using it as an example as my higher time frame chart here because I believe on my 60-range chart I wasn't able to find, you know, really any areas of demand or whatever the case is. If you have a hard time and price is not tapping into an area of supply and demand off of your higher time frame chart, then scale down to maybe another chart to use that as a reference as a higher time frame, and then use a lower time frame outside of that you know, coupled, or so you're basically pairing two charts together. Always a higher time frame in reference of a lower time frame as well. Okay, so the lower time frame is, you must see the confirmation as far as the rejection. In this case, you see it here. I just showed you on the 12R where you can hit the trade back up to. Okay, so now let's look at another example. All right, so that was the demand zone. Let's see here. Price continues pushing higher, as I said. All right, okay, breaks higher, taking out resistance right here, taking out this high. Okay, then what does it do? As it breaks higher to the upside after making this low here, say for instance, it pushed up, pulled back, but on the pullback right here, there were some moves to the downside where price was making lower lows and lower highs, right? Makes a low here. What does it do when it turns back around? Pushes up, pulls back, boom, forms a swing to the upside, taking out this high here. And as it's moving to the upside here, breaking through resistance, it also, what did it do? It took out an area of resistance right here. It took out a level right here. All right? So this was the swing right here. I'm going to show you. Price pushed down, pulled back, oops, pushed down, okay? Turns around, pushes higher, takes out resistance right here. So at that point, once it takes out resistance right here, meaning taking out a swing, as it was moving to the upside and taking out the top end of this, you know, the top of this high right here, okay? Wait for price to come back down, and here is an area of demand now, another area, okay? So made a high, wait for it to come back down to an area of demand. I just marked the zone. This is the zone location right here, all right? Pulls back to it, pulls back to it. Now we're here. This is the demand zone right here. All right, here, 1 o'clock in the afternoon. Let's see what happened. So when price made this high right here, after breaking through structure as it was moving back to the upside, broke structure, took out a high here, pulls back, market area demand right here. When it gets back down there, just quickly look to see above you if you have any areas of resistance off the 12 range chart where price could probably stop it or pause it, okay? So the first area is probably going to be somewhere around maybe 50, 52, you know, between 50 and 52, all right? So we'll go to our 4R now, which we want to use as our confirmation chart, all right? So that's around 1 o'clock, all right? Confirmation for rejection right here, okay? Now, I'm looking for a structure break to the upside, or at least price to show me that it's rejecting with like a W formation or something like that. Price pushed down, pull back, made a low here, turns back around, boom, breaks up, pulls back, breaks higher, taking out resistance right here. And the moment it takes out resistance, you can actually go long. Yes, price does pull back, okay? Now, you can wait for the pullback, okay? You can wait for the pullback so it come back down to the area of demand on the 4 range chart. That area of demand, if you mark that area of demand on your 4 range chart, would be right here. Okay? So what I'm saying is, now we're looking for confirmation rejection from the 4 range. Pushes up, pulls back, breaks higher, breaking through resistance. You can wait for the pullback to the demand zone to go higher and at least take it back up to the high right here. But also, I told you there's area to fill up in here off the 12 range. So continue, stay in the trade, and let it at least come back and test the 40 or the 50 area and possibly up to around about 52. Okay? But to me, when I see this rejection right here, it breaks the resistance. It broke higher. I'm probably, it breaks higher. I'm probably going to go ahead and end the trade. It does come back. You ask, okay, where do you place your stop at? You place your stop at the bottom end of a supporting swing. So for me, it would be right here, the bottom end of right here at 42.25, okay? I do not want to see price break that, okay? It did pull back, but it didn't break or stop me out, okay? That will be my thresh of pain of where I'm going to fold at in the case that price does, push below this, I'm out. It doesn't do that because I saw that it was, area to fill and price rejecting off the 4 range. I said, okay, let me stay in this trade because price is probably going to want to test 50 or between 50 and the 52 area. Another area demand. Just showed you that, okay? So, again, mark the zone off your 12 range chart, all right? Then, look over your 4 range chart. Look for the area confirmation of rejection, whether it's price making some means of W formation or breaking through an area structure. But before you do that, before you get into a trade, make sure that there's no resistance right above where price is going to stop at, or pause at. You may get, that's what happens. A lot of people get in trades, but they fail to look to see is there anything above me before I get into that trade where price can immediately stop my trade, okay? All right, so let's look to see if we can find an area maybe supply. So we'll look at that supply area, okay? So we saw a price was pushing to the upside here, making higher highs and higher lows. The tide changes, okay? The market starts to move to the downside, making low, followed by a lower high, low, followed by a lower high, and then it pushes down, making a low here, okay? So we have a swing right here to the downside. If you can't envision that, let me draw that for you right quick. Low, lower high, lower low. But what do you also see out of this bigger swing right here? There's areas of what we call supporting swings within a swing, okay? So if we look at this bigger swing here, I'm going to show you, I'm going to do away with these lines here. Just envision this bigger swing, okay? Because I'm going to do away with the lines right here. So I can show you each area of a supporting swing where price could actually pull back to, all right? So, again, envision the bigger swing. Here's the first little supporting swing. Low, lower high, lower low, lower high, lower low, lower high, and then price pushes down. So you got a couple of supporting swings within this bigger swing, okay? You got one here, you got one here, you got one here. All right? So when price makes this low right here, okay, it starts pushing back up to the upside, okay? Now, here is an area of demand sitting right here, but price did not stop there. It kept pushing higher, all right? It kept pushing higher. And you have to be able to look for the rejection off the 4 range chart and use, if you're using the 12 range as your higher time frame, in this case here, it breaks through this, it takes out resistance, okay? So, all right, fine, took it out, kept pushing higher. There's another area, which is a supporting swing, where there's an area of supply sitting at. I'll mark that now, because this is where price bounced at, all right? So that area is going to be right here, okay? That's the demand zone. Okay, it's how you draw it is the last, what I call the last green candle on this pullback. Okay, on the supporting swing, out of the supporting swing, pulling back before it pushes and makes a lower low. So basically, when it pulls back here, the high of that supporting swing right before it pushes back down. Okay, from the green candle. Okay, bottom end of the green candle, top end of the green candle, pretty much. If you got a red candle that wicks out above the green candle, then the bottom of the green candle to the top end of that red candle, draw it out. Price retraces to it. Okay, pulls back, rejects that area there. You're looking for the area of rejection, or look for the rejection, but we don't look for it off a 12 range chart. We're going to our lower time frame. Okay, all right. But before I do that, what do I always say do? Look to see if there's going to be any area of kind of like support that could actually, or any area below here. There's some area to fill right here, right? There's area to fill. But I have to be able to think, okay, can price, being in this area to fill, price has to some point come back and fill this kind of, not say gap, but area where it's untested, because price is moving higher here. As it pushed up higher here, did it come back and fill this area back down here and test this level yet? No, it has not. So when I see that, I said, oh, okay, I'm going to my 4 range now because this area to fill right here. Go to my 4 range, and all I'm looking for is rejection. So that area is at 11 o'clock, okay? 11 o'clock on August the 4th. All right, where we at? Let's see. Right here, okay? All this area in between right here is pretty much, if you look at the 12R, it's area to fill. Now, yes, price can bounce at some of these little, what I call micro levels off the 4 range, okay? But still, there's a lot of area to fill right here. So pretty much from, I believe 55 was the area. Look at the 4 range again. 12 range again. Yeah, 55, all the way back down here to say 42 or 43, all right? So to me, that's a good area that has to be tested, that's unfilled. Not to say it's going to fill immediately, okay, and come back down and test this area, but still I know at some point there, price has to come back and fill this area here that's untested, all right? Okay? So in that case and point, all right, price is up there at 55. This is the zone sitting right here off the 12 range. Let's envision that, okay? Rejects it, all right? What am I looking for? I'm looking for a break to the downside. Price taking out some structure. Making structure and taking out, making a break to the downside, all right? Pushes down here. It does take out structure, but that's not enough for me to take the trade, okay? I got to see some clear rejection, either making an M structure or forming a level to the downside. It does here, pushes down, pulls back, breaks lower, okay? Taking out support, all right? At that point, I'm probably going long, short at that case. Or you can wait for price to pull back to a supply zone that you can mark off your 4 range chart, okay? If you're looking for pretty much like well, I'm not gonna say second test, but kind of a pullback as a means of confirmation, all right? So if you do that, once you get a push down, pull back, forming a swing to the downside, and you're looking for a pullback to that area, all right, that zone is going to be, let's mark that, it's going to be right here. Price pulls back to it, all right? The moment the candle turns red to the flips to the downside red, you can go short, all right? But more likely, I'm probably already in the trade the moment it breaks right here, okay? And yeah, I'm taking some heat on. I do not want to see price come back and break above right here at 55. If it breaks above 55, I'm done. I got to get out, okay? Bottom line, all right? It doesn't do that. It does pull back. So if I got in my trade here at 50, it pulled back to 53 and a half, whatever the case is, 3 points, whatever the case is. I'm still good as long as it doesn't break above 55, all right? Doesn't take that area there out, okay? So if you want to kind of safeguard yourself and look for some double means of confirmation, then wait for price to break on the 4R. Wait for it to make that swing to the downside, break your structure, pulling back, mark a little demand zone off your 4 range. The moment it comes back and fills that area of demand on the 4 range just as well, candle closes the red to the downside, take it going down. And what do you take it down to? You look at your 12R. Again, like I said, this area here has to be filled, okay? So you get into that trade. Once you see the rejection on your 4 range, right here, close of, pulls back. Pretty much it closes at 53, bottom end of 53 when it closes that red candle, and take it back down here to 42. So you're almost you could pick up 10 points there, Yes, it gets a little bumpy. Price pulls back. you know, you get in here, comes down here to 49. That's the bottom of this low right here when it pulled back. Okay, you can get out there if you want to and pick up 3 points. All right, or just stay into it. It does pull back a little bit, pushes lower, but that's price, guys. It's going to do this rocking, kind of rocking back and forth thing where it's making a low, a high. On pullbacks, it has to do that. You know, that's the way the market moves, okay? But eventually it comes down there and it tests all this area right here that's not yet filled, okay? So this is the rejection up here at the 12 range, hitting an area of supply, rejects, tests the area that has not been tested yet back down here to 40, say 44, okay? All right, so that's pretty much all I, want to talk about today was zone location, how to identify them, where they're located at, what supply and demand pretty much is, and just, if you don't know much about supply and demand, guys, I highly recommend you kind of do your research, your homework, and see why it's so important to, take a look, at least put forth the effort and take a look into. That's all I have for you today. Hope you guys really appreciate the video. And by doing so, looking for those confirmation areas of rejection, it will protect you as far as not, getting into a trade and taking a lot of drawdown. So it eliminates the headache of, just kind of feeling more confident about your trades and eliminates the headache of losing money. All right. Take care. Have a great weekend. I'll see you guys next week on Monday.